Welcome to Drill Down Earnings. We have quarterly results from Coherent. This is the business story behind One Stock and Move. I'm Chief Market Strategist Cory Johnson with Epistrophy Capital Research. And before I get any further, I'm totally conflicted on this one. I own the stock. I am not giving investment advice, although my advice to me would have been to buy more of this stock when I first got in because it's done quite well. This is fiscal 2025 earnings here for this company, first quarter 2025 earnings. So this was well ahead of what Wall Street estimated in terms of numbers. This was $1.35 billion in revenue, 74 cents in terms of earnings per share. It was also better than my estimates. And this is a business that's in AI. They're making devices that are used in telecommunications and industrial, and yes, in data centers to move information from one place to the next, often using lasers. And boy, this business is doing really well. AI has driven a real rebound in the business for Coherent. So this fiscal 2025 results here, revenues were up 28% on a year-over-year basis, as I mentioned. Gross margins were fantastic at 38%. Their non-GAAP earnings per share, so if you take out stock compensation and importantly take out the dividends that they pay to preferred shareholders, of which I am not one, they would have had 74 cents in earnings, which is to say they didn't have earnings. So let's not give them too much credit where they don't deserve it there. But this is a doohickey story. This company's got this really hot doohickey, in this case an 800 gigahertz transceiver or an optical communications transceiver, otherwise known as a digital coherent optics tunable laser that will move information optically over a very short distance at incredible speeds. And when you're running an AI load and you can't sort of stop processing it, but you want to move it from one computer to the next, from one set of GPUs to the next, you can do it using this 800 gigahertz and maybe someday 1600 gigahertz from companies like Coherent. And Coherent's doing quite well at this bit, and they're a big player in this world of optical transceivers. Now, with the rise of this data center business, they've got back to operating profits here, and operating margins now up to 6%, which is the best they've been in a very long time for this company. And I mentioned they're in other businesses. They're in industrial, they're in electronics and instrumentation. But this communications business, whether it's for telecom or in the data center, is just doing great. Now up 14% on a sequential basis. But look at the March going back to September of last year. December was better, March was better, June was better, September was better. The guidance now going forward is even better. And that communications business is really driving the growth overall at this company. So how did the stock react? Well, it went kind of crazy after hours. It went down, then it surged, then it went down again, then it was back up again. Overall, about 4% in after hours trading. And this stock was up 203% in the last year. I told you, Johnson family is happy. In any case, CEO Jim Anderson, back there in Pittsburgh, talking about what their customers like about not just the technology, but their ability to deliver it in a way that is both predictable and with a supply chain that is deep enough where the customers can actually trust Coherent to deliver what they've sold.
We don't just assemble the transceiver, for example. We manufacture a number of the key components that go into that transceiver. So whether that's a pixel laser or an EML, or that's isolator, or even the garnet material that goes into the isolator that goes into the transceiver, a lot of that we do ourselves. We do leverage outside suppliers sometimes as well if it's to our benefit. But that verticalization is also the second piece that gives us, again, that really strong supply chain resiliency. And I think that is definitely recognized by our data center customers and becoming a more important factor moving forward. And then on the second part of your question around expanding TAM, that's a great question. I would say definitely the TAM is expanding for us for the reasons that you noted.
So the beat and raise is one thing, right? To beat their estimates, to beat their guides, and then to raise numbers. But it's a whole different game when the total addressable market is getting bigger and bigger, and that's what they're seeing at Coherent. So fiscal first quarter earnings for 2025, Coherent numbers, very strong numbers. I'm biased to this one again. It's a stock that I own. I'm not giving investment advice. I wouldn't do that to you. But this one has been very good for the Johnson family, with the stock up the revenues up 28% on a year-over-year basis to $1.35 billion. Gross margins of 38%, adjusted earnings per share of 74 cents. But maybe most importantly, their AI data communications growth is just so powerful. 68% increase in their biggest business on a year-over-year basis. Very powerful quarter from Coherent. Thanks for listening to Drill Down Earnings. I'm Cory Johnson.